Stop what you're doing. The Asian markets just closed. That's the KSP. And right now, the supply chain is flashing a major, major warning.
And no, this is not a drill. The data is literally screaming that the entire semiconductor trade is under attack.
And that warning? It's aimed squarely at NVIDIA. What just happened overnight to its key suppliers? Well, it's a direct preview of the US Open. You need to pay attention. Okay, let's get right into it. What you need to understand is this wasn't some broad market panic. No, this was a targeted institutional strike. This was a rotation. See, the entire drop in the Korean market was concentrated in just one place: semiconductors. It was a precision sell-off, and it was driven by very specific, very credible fears that actually started right here in the US. So what were the triggers? Well, first you had the narrative from Broadcom's CEO talking about an AI deceleration. Then you got renewed fears about export restrictions on NVIDIA's new H200 chips. And the result? Foreign institutions absolutely dumped their holdings. We're talking nearly $1 billion worth of stock in NVIDIA's main suppliers, Samsung and SK Hynix. But here's the key question. Where did all that money go? It didn't go to cash. This was a classic sector rotation. All that capital fled from aggressive, high-risk tech and immediately ran for cover in defensive growth sectors. The institutional algorithms got the signal, loud and clear. Sell semiconductors, get out of the AI trade. And the command that followed was just as simple: buy bio. That capital flowed directly into the one sector with growth drivers that are completely independent of the whole AI story: healthcare and biotech. And the proof is right here. As the tech sector was bleeding out, Samsung Biologics surged nearly 5%. See, this wasn't a guess. It was a calculated move into a safe haven. The money trail couldn't be clearer. But, and this is a big but, here's the trap. This whole neat rotation story only works if one critical level holds. And that brings us to the single most important number for the US session: 25,120. That's it. That is the line in the sand for Nasdaq futures. Where the market opens relative to this exact price is going to determine the entire trend for the day. Now, what's making this even trickier is the futures rollover date. You've got huge institutions adjusting massive positions, so you have to expect extreme volatility. I'm talking erratic price swings, whipsaws. Don't you get caught in that chop. So look, the outcome here is binary. There is no gray area. If Nasdaq futures hold above 25,120, the rotation story is still valid, and a technical bounce to 25,300 is definitely in play. But if it breaks below 25,120, the entire thesis is dead. That signals a much, much deeper trend collapse. And let me be perfectly clear. If 25,120 breaks, this isn't a rotation anymore. It's a market-wide risk-off event. In that scenario, there is no safe haven sector. Cash is the only hedge, period. So let's translate all of this into an actual actionable plan for when that opening bell rings. Okay, here is your trade plan. Go ahead and screenshot this. If Nasdaq futures are below 25,120, your focus is on shorts or hedges. Think SOXS, NVDA, Broadcom. If we're holding above 25,120, then the defensive rotation is on. Look for relative strength in things like IBB, XLE, and Eli Lilly. And the most important rule of all, with the rollover volatility, you avoid all action in the first 30 minutes. Let the market show you its hand first. This is in my opinion. It's not a guess. This entire plan is based on the capital flows and the hard supply chain data we're getting out of Asia. The data doesn't lie. The scenario is set. Be ready for the bell. I am LoRosha.